Hi, this is Joseph. It is Wednesday, August 22nd, 2018. We are currently looking at Bitcoin dollar on the MetaTrader platform. So this particular presentation, we're going to address some things as far as my expectations, long term, short term, and also answering some of these questions. So for those of you who are attending live, I am recording this so you can watch this again later, the replay. And then any of the technical analysis information that I share, you can go back and dissect some of that information there. But a lot of this, so for those of you who are maybe if this is one of the first videos that you've ever watched on my website or on my YouTube channel, I am a professional trader. I've been trading since 2001. I actually started off trading futures. And then shortly after that, maybe about 3 months after I started trading futures, I found out about Forex. And I've been trading anything that I can get my hands on, Forex, futures, Bitcoin, cryptocurrencies. 2010, I purchased some Bitcoin and I started day trading Bitcoin as soon as I possibly could. I mean, the MetaTrader platforms, a lot of them, a lot of the MetaTrader brokers, uh, they don't all offer this, the ability to trade cryptocurrencies. Only some of them do. A lot of outside of the United States brokers offer it. And one of the reasons why I show this particular chart, the Bitcoin dollar on the MetaTrader platform, is that very often I am also trading Forex with my Forex students. I do offer Forex services, and the strategies that I'm going to talk about here and that I teach are applicable to just about any market. Now, there are some considerations. Obviously, you've got to take into consideration the market that you're trading, right? What is this particular instrument that you are trading? For example, when I trade futures, some of the techniques that I'm using, I'm obviously going to be using a different time frame. And then some of these strategies can also be applied to swing trading. You can use it on the 4-hour daily chart, weekly, monthly chart. For example, just recently, the last couple of weeks, we were trading gold and primarily focusing in on the daily charts there and the weekly charts. Big price projections, weekly charts, monthly charts, looking at gold with, you can watch the video there on the website where my expectations are for gold over the next maybe couple of years and some of the lows that we could see with gold before it actually starts to make a move in the opposite direction. So, I'm not going to get into, and I get this email. I know that I can see some of the questions, my expectations about whether or not I think Bitcoin dollar is going to go back up towards the 20,000 level. And as tempting as it is to want to go back and review everything that we did last year, you can see some of the videos and you can see in the blog the trades. I'm going to go ahead and detach this chart. Again, this is a daily time frame for Bitcoin dollar. If I did not mention that, I'm sorry. So there's a lot of videos on the website, me talking about the breakout and us trading it from 2016, 2017, using these particular techniques. There's an arrow here. I don't know how long that's been in place. That's April 2017. There's a continuation breakout trade here on the daily time frame. Another continuation breakout trade. So these strategies can be used on the daily time frame. And then I also use the continuation breakout trade on the 1-hour chart. And I'll talk about that in a moment for the more immediate time frame, what my expectations are over the next maybe few trading sessions or the next week or so. But again, going back to, as tempting as it is to talk about all of this again, I'll go ahead and leave all of that to the videos where you can find my discussion about this particular pattern. So the discussion, the psychology behind traders, right? And I'm going somewhere with this in just a moment because I am going to answer a couple of questions. So, the psychology, we've seen this pattern over and over again. I mean, I say that all the time. Whenever I look at this chart, I've got to smile. Same thing happened with oil a few years back. Same thing happened with silver a few years back, 2011. It happens with gold. It happens everywhere. This is not something that that somebody with some experience trading in different certain events, I should say, we can call them For example, the global financial meltdown, right? 2008, 2009, 2010, all of the aftermath, everything that was going through, every day that, we would sit down and we would trade together and we were trying to look for good opportunities that were not going to wipe out people's trading accounts. So I started my first chat room that was open to the public in 2007. And then obviously right after that, a year or so later, the global financial meltdown occurred or developed. And as it was unfolding, it was very obvious using some of these strategies. I'm not going to say that I'm some super genius. A lot of people were able to identify that there was something happening in the markets. Real estate wasn't going to keep. I mean, I've got a cousin that was in the mortgage business, and years before the real estate market started to collapse, one of the first things she said was, I'd hate to be one of those companies that are holding the bag on those no qualifying loans. There was, I think, loans that were 125%. She was just laughing at the whole thing. A lot of people were able to see it. It wasn't just traders and insiders. So every once in a while, you see people on these TED Talks or you see people on YouTube and they'll talk about how they called this big global collapse and they could see that it was really going to start with the real estate market. Well, there were a lot of signals there. There were a lot of clues and a lot of things to see. And again, it really comes down to that repetitive behavior, trader psychology, market psychology, people jumping in too late, people getting into it or getting into the market, certain, whether it's gold, oil, silver, Bitcoin, doesn't really matter what it is, people getting real estate, people getting in at the end, right? You can see a lot of this starting to collapse and how it peaks. And then using these technical analysis skills allows you and gives you the opportunity to identify and confirm that this is really happening and then look for the opportunities. So now you have confirmation, right? You want, for example, if we take a look at this move up here through November, December, and then it peaked out and then it pulled back down and created this sharp move here. Again, this is the daily time frame. So these are daily candles, about 5, 6 days here. 1, 2, 3, 4, 5 days. 5 days in a row, it drops straight down. And then it prints that low and then it bounces and people were thinking, okay, well, it's just a pullback. Bitcoin does that. A lot of markets do that. A lot of charts will look like this. And especially after a big run up like this with so many people getting involved, people trying to get into Bitcoin, wanting to trade Bitcoin with no trading experience. And one of the things I always caution people when they try to get into markets like this or get into anything like this is that you got to remember you're competing against a lot of people with a lot of experience and a lot of people very aggressive about making money. They're also counting on your inexperience and the fact that you're going to make these amateur mistakes. So, a lot of people are looking at this bounce thinking that's it. Now it's going to go back up and take out 20,000. So then they start putting in life savings. I read articles every day that pop up in my newsfeed, including today, about people, who tried to make a lot of money here. It's not just Bitcoin, it's gold, silver, oil. It doesn't really matter. This is a pattern that repeats all of the time. Keep that in mind. That's what I'm trying to share with you is that this is not uncommon. This is something that can be studied. This is something that can be learned and you can experience and profit from it. So I caution people, you're going to try and make money with people that are very competitive, have a lot of money, have a lot of experience. Be very careful. So, my discussion about how we were able to trade it all the way up and then realizing and identifying that it was topping out there. I've got videos where I was actually calling the top here with Bitcoin. But again, it doesn't make me a genius. I just have the experience. I have the experience to trade this pattern. I understand and I can see the clues and the signals and I have confirmation of how the market's reacting to it. And then I also understand technical analysis. So it sort of confuses me when I see, and I just saw a video earlier today on a gentleman who's got a YouTube channel and he's trading Bitcoin and he's trying to teach people how to trade cryptocurrencies, Bitcoin in particular. And he says that he will teach you how to swing trade. He will teach you how to day trade. And I just, it's not, I'm not trying to say that you can only be a good technical analysis or an expert at something if you put in the time. That's true if you put in the time, but that's the key is how much time. For every one of us, it's different. Each one of us has a different set of abilities. And it's going to mean that for some people, it will take a year or two, or a few months, or a few years, or 10 years, or 5 years. Everybody's different. Everybody is different. But one of the things that I would definitely caution anybody, if they're listening to people on the YouTubes and they're trying to get information about how to trade for free, uh, take a look at the person's experience, the number of years that they have. Sometimes some people will say, "Well, I've been trading for a year and a half. I've been trading Bitcoin for a year and a half. I've been trading Bitcoin for 2 years." And sure, they went through this move up and this move down. So I guess you could call that a pretty severe um, uh, financial crisis to a certain degree, the way we traded, like that global financial crisis. But there were many things to take into consideration when you're trading things on a global level. Not that there weren't things that had an impact here on Bitcoin on a global level. There certainly were. I teach how to look for those um, the global impact that could have a change here, a reflection, a revaluation here in price with Bitcoin. You definitely have to be aware of all of that. But it's the people with the amount of skill who have traded through specific events like this over and over and over again. So I've traded through the global financial meltdown. I traded through, the big move in oil, which was also right about the same time. Silver a few years later, right? Any the European crisis, Brexit, all of these different crises, a Greece crisis, all of these different events have all played out the same way. So the behavior is usually afterwards, after you see a big move like this, whether it's up or down, the behavior afterwards is always about market psychology, in my opinion, and then looking for confirmation technically in the charts. And a lot of people, they just continue to look for these opportunities thinking that Bitcoin's coming back. Bitcoin's coming back. A lot of people that have put in their life savings. Again, I mentioned that just today I read another article about some, people who uh, just lost everything. I think it was over $100,000 this one guy lost. And he got in at different levels here and was afraid to miss this move here as it was going to 20,000. People were calling 50,000 and then 100,000 and then even 250,000. It's all possible, I guess, but we'll know when it happens. And when it happens, we're going to get the opportunity to trade it all the way up or all the way down. Doesn't really matter where it goes. Just like these opportunities here, we were able to trade it. We got the opportunity to trade it all the way up, and then we traded it all the way back down. At this point, I would be really careful about listening to people that have a very limited amount of experience, especially with technical analysis. I just don't. I see, I don't know how to get it across to those who are trying to follow these individuals on YouTube. Just be really careful. I mean, if you've put a lot of money, if you've maxed out credit cards, if you've put life savings, inheritance, if you've sold things, a boat, a car, a house, and you've got it all wrapped up here in Bitcoin, and then you're waiting for it to bounce and come back, or if you've, made a lot of money in your business and then you put money into Bitcoin thinking because everybody else was easily making money before Christmas, that you could do the same thing. I mean, if you every time you see one of these bounces and everybody else sees the same thing and they're all screaming it's going to go back, it's time to start buying again, be really careful. Be really careful. I keep saying you're going to know when it's on its way back up when it happens. We're going to get confirmation. It means that you're probably not going to get in at the very bottom or the very low just before it starts to move up. A lot of people are looking at a lot of inexperienced traders look at the markets and look at charts, and then they'll find and identify key highs and lows and think, well, I could have sold here at the top. I can see a pattern here. It's not that easy. You need more confirmation. For example, this particular pattern right here, as price made that new and started to drop there, that new high and then that new low there, um, besides being able to identify this three pushes to a high here, this pattern here that identified it was all from a technical perspective, this was all about to collapse and unwind. And you could also see again from that trader psychology, that mentality, all of this sort of comes together. But even when it pulled back here and we had a new A high or B low and things were sort of moving sideways, at that point, I still needed more confirmation. I wasn't convinced that things were going to go a whole lot lower than that spike low until candles start closing below that B low. And then we got another move down here that accelerated things to a much faster degree. What I'm getting at is that a lot of people are going to find a lot of these different patterns here, a lot of people with a very limited amount of experience, and they're going to be looking at these charts saying, well, I would have sold it here, or I would have sold it there, and I would have made so much money here. But again, that's not confirming anything. That's more or less picking highs and lows. You're going to lose a lot of money trying to pick highs and lows. Sometimes you're going to be right, sometimes you're going to be wrong. That's not the way to go. If this is going to be a trending move to the downside, you're going to get multiple forms of confirmation. You're going to get usually second entry opportunities, I like to refer to them as. We're looking at a daily time frame. You get these on the 30-minute, you get these on the 15-minute, the 1 hour, the 4 hour. It really is relative to the time frame that you're looking at. So at this point, I don't have an opinion about where when it's likely. I'm going to tighten this back up again. When it's likely to head back up towards 11,000, 12,000, 13,000, or 18,000. I'm going to know that when it starts to take out some of these key resistance points. Many people, even just in the last few days, trading days this week and last week, were thinking that Bitcoin was going to roll up a lot higher. Even just looking at the 4-hour chart. If I go to the 4-hour chart, I watched another video just yesterday, and they were talking about that it was going to move up a lot higher and start filling in certain levels. You don't know that until you get confirmation. And a lot of people took that advice. These were videos on YouTube just in the last 2 days, and they went long Bitcoin, and it collapsed and turned around and rolled right back down again. And then these people are severely negative on their trade. I mean, some people aren't using stop loss in these situations because the mentality here was that if these people were buying when price was at 8,000, 9,000, 10,000, or even at 17 and 18,000, if they bought and they're still holding Bitcoin, in their opinion, they're thinking, well, I haven't technically lost anything until I've closed out my position or until I've accepted that, right? Until they get rid of that Bitcoin. It doesn't make a whole lot of sense. If you're going to be getting into trading, even from an investor point of view, there still has to be levels that you've identified before you get into the trade. Doesn't matter if you're day trading it or you're trading it, swing trading, day trading, or as an investor, you still have to have targets. You don't get in. I get really frustrated because there was another article just the other day that I read, and it was an individual who was talking about internet marketing, and he compared internet marketing to trading and how you can easily set it and forget it, and those are the people that make most of the money. And to a certain degree, that makes some sense, but you shouldn't be getting into any trade. You shouldn't get into the market unless you have a specific take profit level, unless you have a place where you can protect profits, right, that you earn, or you know that the trade is no longer going to work out in your favor and it's time to get out. It doesn't make any sense to me to be in the market. A lot of people don't want to take the time to learn that skill. That takes, in many cases, to learn that skill, that takes sometimes the experience of losing a lot of money or losing and making a lot of money, right? That's going to take a lot of time. How much time do you have to trade? Do you trade every day? Are you swing trading? Are you paying attention? Are you learning from your mistakes, or are you just making the same mistakes over and over again, expecting things to be different? There's so many things that go into this. It is a business that really requires a lot of attention. The people that are managing funds that are making $500 to $1 billion a year for managing money for individuals, they're not doing this because they just had 1 or 2 years experience. They traded through a lot of different market environments and they learned these skills. They learned and watched everybody make these mistakes, including themselves, and they know that you're going to make these mistakes too. And they can count on it and they can trade on it. And they're going to make money. You're going to suffer if you don't take the time to understand how to correctly understand market psychology, trader psychology, social psychology, that whole mass, that mood, social mass, I'm sorry, social mood, and then the technical, and then understand how global economics can have an impact, political events can have an impact, statements can have an impact on the market or your trade. All of that plays out. And if you haven't experienced that, or you haven't realized that even a political statement from a a very important official can have an impact on your trade. If you didn't know why your trade and then realized afterwards, you're going to remember that. You're going to remember that that was a possibility. But you don't know that until it actually happens, unless you're unless somebody's there to teach you, unless somebody brings this to your attention and you can be made aware of that and look for these clues, look for these opportunities, look for these signals. So right now, going back to the last few months. I mean, I'm not saying that price is going to go any higher other than in some of these breakouts. And when we trade some of these breakouts, which we did a few weeks back, we have to have specific take profit levels. In order to identify some of these take profit levels, even on the daily time frame, I'm going to go down here to the 1 hour chart. This is the 1 hour chart. I'm going to be looking for breakouts, support, and resistance. Key levels that would identify the possibility of a breakout. And then again, looking at the daily time frame, knowing that it's going to, we need a lot more to happen as far as key support or resistance, depending on which direction you're trading it in, to be taken out, and then confirmation of those levels. We're not talking about just spikes through highs and lows and then it pulls right back down inside of that consolidation range or reverses and goes back the opposite direction. I'm talking about avoiding head fakes. This continuation breakout trade strategy that I use primarily with cryptocurrencies and Bitcoin, it is a very structured technique that also helps the confirmation of that continuation breakout trade. That particular technique, confirming that I have a valid signal, also keeps me from getting into head fake moves. I developed that method back in 2001, and it was the first strategy that I developed as a result of me joining chat rooms and doing what everybody else is doing when they first get into this business, right? As a trader, they listen to other people who are inexperienced, don't have, they shouldn't be calling out trades. I joined a chat room and they were calling out trades all day long, and I was losing money all day long. And very often when I would ask, why did that trade fail? And not just me, I mean, every other trader that was asking inside this chat room, why did this trade fail? Very often the answer was, that's just how trading is. You have to prepare for losses. And they didn't give explanations. And that just didn't sit right with me. There had to be a reason, technically. There had to be something that could explain why that trade failed. Why didn't it go higher when these people were expecting it to go higher? Why did it turn around and go back the opposite direction? Something to that effect. Whatever it was causing those trades to fail, because our expectations weren't in line, there had to be a reason for it. And I needed to find out those reasons. And that's where I started. So this continuation breakout trade, I used to get into trades with these breakouts where price would take out a high or a low. Chat room moderators would scream buy or sell depending on what it was doing. And then 15, 20 minutes later, or even an hour later, price is right back to where it started or lower. And we would all lose money. Nobody knew where to place stop losses. Nobody wanted to use a stop loss. They were hoping it was going to come back. Nah, that's not how it works. You don't have to trade that way. You can trade with the stop loss. I've even read articles throughout my entire trading career where people say, the best way, or really the only way to trade and to ensure that you're not going to experience any losses, or to ensure that you're going to earn profits, is to trade without a stop loss. And I think that is ridiculous, and I think that it's irresponsible. Again, from the moment you decide to get into a trade, before you get into it, whether you're an investor, a swing trader, or a day trader, you should have a specific take profit. You should know where your entry is, and you should know where your stop loss is, so that way you can determine that the trade's not going to work out anyway, right? If it's going to hit your stop loss. That is also another point that requires a great deal of time spent trading. Sitting at the computer, sitting at your desk, looking for trade opportunities, watching how the market reacts to news, political events, comments, statements, highs, lows, technical levels, support and resistance, all of it, everything. You've got to put in the time to see how far things move around based on specific entries. When I found out, and when I found out where how far these trades would usually go on these breakouts. When I developed this continuation breakout trade, when I found these take profit levels, I also needed to have the stop loss. So the stop loss was also a matter of testing. It took a great deal of testing. I started off with small stop loss like everybody else does. I don't want to lose more than 15 pips. 15 pips wasn't, or points, pips for Forex, or points, regardless of what you're trading, wasn't in most cases going to hold me into the trade if I was going to be trading off of, let's say, a 30-minute, a 1 hour, a 4 hour, or a daily chart. It doesn't usually work. Sometimes you get lucky and you get these opportunities, but you've got to take into consideration everything relative to the time frame that you're trading as well. How big are these retracements? How big are these moves? What time frame are you trading? Are you looking at a 3-minute chart, 5-minute chart, or you're looking at a 4 hour chart? All of these can have an impact, and you've got to test that. You've got to have that experience. Uh, I've estimated that I have over 78,000 hours invested in my trading career. And again, I've been trading nonstop since 2001. So I've got a great deal of experience. And I realize and I understand that whenever I sit down at my charts, I may not get a trade opportunity. There may be nothing for me. According to my trading technique, there might be strategies that other people are, if you go to a blog or you go to a forum and it's quiet, it's let's say 8 o'clock New York time, PM, Thursday, not a whole lot going. Consolidation, we're looking at, Bitcoin dollar here inside of consolidation here on the daily time frame. Here's the 1 hour. We got to move up earlier today. Now it dropped, and now we're just sort of going sideways here. There's not a whole lot to do right now. And people, when they sit down at the desk, they're thinking, I got to find a trade. I got to find a trade. I need to make some money. There isn't you're not always going to get the opportunity to find a trade to execute. You've got to wait for that opportunity based on your trade plan. For some people, there may be a perfect setup here that I may not understand, that you may not understand, or you may understand it and I don't see it. And then when I get into a trade, you may not understand what it is that I'm doing. It's different. That's the beauty of and the yeah, I guess I should say that's what makes trading just that much more interesting, is that it's a never ending constant learning experience. For me, I'm always learning something new every week. I love it. That's how it is for even the most experienced traders around the world. They're always learning something new. Markets are changing. Markets, the global economic environment is changing. Again, there are certain repetitive behaviors and patterns that we can see, not just technically, but also with the market collectively, the people, the movement, the participation, the group of traders collectively around the world, everybody making those decisions. We can see these patterns repeat over and over again, and they usually surface here technically in the charts. So at this point, again, I'm going to come back to, I don't think it's time to start loading up on Bitcoin. I really don't. I think that it's a great opportunity to trade it intraday. We get these opportunities where, maybe we can trade for a few hours. Maybe we can trade for 1 or 2 or 3 hours at a time. Sometimes these trades might go on for maybe a day and a half, depending on the size of the breakout. We'll see that on some of these larger time frames. But I think it's very important. Please remember, be very, very careful about the people that you're listening to on the internet. If they've got a year's worth of experience or two, they've probably seen some things. But I don't know that it's a good idea to listen to them. And then again, you can take two people who have 1.5 years experience, and one guy's going to be better than the next guy. And how do you know? You know what I mean? You might take his advice and it might not work. And at the same time, if you're sort of all over the internet looking for information and you're following all of these different people and things aren't working out, you're following their advice and it's not working out, don't give up. I want you to know that market trading isn't rigged. It's not something that a lot of people that get into this business and then they lose all of their money and then they leave, they never come back. They're really angry about it, right? They'll say, it's like gambling. It's not, there's no way to really understand where price is going to go. They totally discount things like economics and I mean, even economic reports. There are opportunities to trade during events like that. These people that are really angry about the fact that they've lost a lot of money because they didn't put and invest enough time into their education or career. They were just hoping to get in. That was their approach, right? They were gambling. If they thought that they could come down in here and set up an account, sit down at the desk and find a few trades, even for a few weeks or for a few months, and make some money, that is gambling in itself. That's not trading. You might call it trading. I don't call it trading. I think that what I do is trading. I put in a lot of time here, and it's difficult to hear these people call. You can call it whatever it is that you want to call it. But again, I would just strongly recommend being very careful about the people that you're listening to. And then you've got people like in my class that have been trading for 10, 15, 20, 30 years. They've traded through a lot of different experiences and they see how people react and they can safely trade. Not only that, but they've tested out their own strategies. They've got scientific proof to back the techniques that they use. They know that they work or they won't work, or they know when to use these strategies and when not to use them. That's another thing that I share with all of my students is to understand these methods. It doesn't matter if it's mine or yours or somebody else's. Understand them so well that you understand the conditions at their optimum, the optimum conditions for these trade techniques to be used in. And then you also know when not to use them. Stay away from those times. Have different type of strategies so that you can trade in different types of market conditions, right? Consolidation, you want to be able to trade off of support and resistance. How do you identify that? Do you have the skill? Do you have the experience? A lot of people completely rely on indicators and then a lot of volume indicators that are sort of just throwing up information on the side. Sometimes it's just tick volume. There's a lot of different things that can confuse you in a situation like that. And you really need to be able to gather that experience to understand how markets work. It goes far beyond just looking at some simple indicators and a little bit of volume there. There's be very, very careful. So I hope that that sort of addresses some of these concerns that a lot of people are having here looking at these daily time frames. Coming back to this daily time frame, it is sitting down here bouncing around at that spike low that was printed there February 6th, 2018. We're sitting here at some of these lows, and I know a lot of people are really excited about this, saying, it just keeps hitting it. It just keeps hitting it. Eventually, it's going to bounce, and it can also break through that support level and go a lot lower. Please be very, very careful.